And now here's Myles with our chart of the day.
All right, good old-fashioned chart of the day. Let's talk a little bit about Millennials. Earlier today, the Conference Board put out its consumer confidence index for the month of June. What you're looking at here is confidence for consumers under the age of 35. Now, 10 years ago, that did not include Millennials. Of course, 10 years ago, the reason that reading stunk is because we were coming out of the financial crisis. But what we're looking at today is confidence among Millennials falling to its lowest level since May 2016. The chart we have here is confidence on a quarter-end basis over the last decade. If you go on a quarter-end basis, we're the lowest we've been since June 2015. The monthly brings it May 2016. But I think it again kind of highlights one of these themes that we've hit on a few times, and we're starting to see it particularly in those manufacturing surveys of essentially all the optimism that came with Trump winning, with Trump cutting taxes, with the new surge of a business-friendly administration. It's all kind of undoing itself, and it happens in different areas. So you see manufacturers saying, well, we can't get any orders. Then you see the service sector saying, well, we can't hire anybody, or we don't want to commit to hiring people. And now we're looking at consumers who are basically saying, I'm not sure if I want to go out and spend money. And I think particularly among the under 35 set, it should be troubling to policymakers to see this kind of decline, because these are the folks, believe it or not, Millennials are now having kids, right? They're having families. They're big-time consumers. They're moving up in their careers. And if these are the people who are not feeling confident in the economy, it's hard to see how the demand side would kind of improve here.
I guess the survey day was before Bernie Sanders said they would take away all their student debt.
That's right.
Because then maybe you can see the confidence change. It's interesting, though, because by Ryan Dietrich from LPL yesterday, I mean, he seemed to be encouraged by a lot of the softer, what you call the softer confidence data
I would just
that's out there.
Respectfully disagree with that.
I mean, that's where, he was pretty bullish. I was like, why? Yeah. And that's what he's pointing to.
So the Fed has acknowledged that manufacturing data has been pretty soft, especially on capital expenditures and that's a huge driver of the economy. But actually, the Fed has said that the consumer side of things has looked pretty solid so far. Actually, even today, Powell said in the conference, or in his public appearance in New York, that the consumer has looked very solid, despite the fact that that reflects the numbers that we saw this morning, where not just Millennials, but consumers across the board had lower confidence. Now, obviously, the Fed might argue this is a kind of real-time measure of the future, and that this could all tick back up as long as we get out of the trade negotiations with a positive result. Right. So you do wonder to what extent policymakers really see this as a as an actual risk, as opposed to something that's just kind of temporary for right now that could really reverse in time. That's the thesis of Kaplan from the Dallas Fed's argument that we shouldn't be quick to cut rates because we need to wait for more development.
The reality is the policymaker side always thinks that demand is basically, there's nothing you can do about demand, right? So they always focus on supply, supply, supply. We've got to have supply side reform, supply side this. We've got a huge supply side tax cut. And everyone thinks demand is just fake, when in reality, it's actually the exact opposite. And so if you have consumers who are getting paid a little bit more money, but not a lot more money, and now they're worried about the future, what do you think they're going to do? They're going to retrench. And then we're starting to see some of that in the data. And frankly, consumption data last year, Chung, for all we saw with GDP was not as good as it was 2014-15.
Yeah,
so
we need to see Q2 also. So
yeah.
And that chart doesn't seem good for real estate because household formation, Millennials. Brian Chung, thank you so much for joining us today.